All right, today we're putting four fintech heavyweights under the microscope: Fiserv, FIS, Global Payments, and Jack Henry. We've got the deep dive reports, and we're going to figure out which of these giants, on paper, makes the most compelling case. Let's get right into it. So, here's the big question, right? Four massive companies, all trying to win in the world of payments and banking tech. But they're all playing the game a little differently. By the end of this, we'll see which strategy seems to be paying off the most. First up, let's meet our contenders. First in the ring, you've got Fiserv. Think of them as the massive, sprawling powerhouse of the group. They're kind of a one-stop shop, a big conglomerate that has a hand in everything from the merchant world, with stuff like their Clover systems, all the way to traditional banking services. Next, there's FIS. Now, these guys are on a bit of a comeback tour. After a huge and, let's say, troubled acquisition, they're now refocusing. They've shed their merchant business to get back to what they do best, providing that core, nuts and bolts technology that really powers banks and the capital markets. Then we have Global Payments. These guys are a pure play. They are absolutely laser-focused on one thing, and one thing only, completely dominating the world of merchant payments. Their entire strategy is built on getting bigger and consolidating that market. And last but not least, we have Jack Henry. They're the niche specialist in this fight. You see, they don't even try to be everything to everyone. Their whole world is being the go-to, trusted technology partner for thousands of smaller community banks and credit unions. Okay, let's ring the bell for round one. We're looking at their business models and what are called competitive moats. You know, basically, how do they make their money, and what do they have that makes it so darn hard for anyone else to come in and steal their lunch? And right off the bat, you can see a really crucial difference in the quality of their defenses. So Fiserv, FIS, and Global Payments, they all have what the analysis calls narrow moats. They're built on sheer size, which gives them some cost advantages. But look at Jack Henry. Their moat is described as wide. And why is that? Well, it's because of this incredible client loyalty. We're talking a 98% retention rate. Their customers are just so locked in that switching is almost not even an option. So this really sets up this central conflict, doesn't it? It's breadth versus focus. Fiserv makes its big, diversified model work by being a leader in a bunch of areas and then selling more stuff to their existing clients. Jack Henry just thrives by doing one thing better than anyone else. And this is also a perfect cautionary tale. I mean, look at FIS. They tried to be that broad conglomerate with the WorldPay deal, but that lack of focus ended up being incredibly expensive, forcing them to retreat right back to being a specialist. Okay, let's move into round two, because you can have the best strategy in the world, but if you can't execute, it's all for nothing. So here we're going to look at management, we're going to look at financial discipline, who's actually running the tightest ship. You know, culture can tell you a whole lot about execution, and the difference here is, well, it's pretty stark. Jack Henry is way out in front with an impressive 4.1 out of 5 on Glassdoor, which the reports link to exemplary stewardship. And then you go all the way to the other end of the spectrum, and you've got Fiserv sitting at a 2.9 with a culture that's described as a turnaround that's wrestling with operational problems. It's a pretty simple idea, right? A happy, well-run team usually gets better results. And when execution and big money decisions go bad, man, they can go really bad. Just look at this number. FIS spent $43 billion on WorldPay. This deal was supposed to create an unstoppable payments giant. Instead, it was a mess, and they had to unwind the whole thing at a huge loss, just destroying value for their shareholders. It's such a powerful contrast to Jack Henry's approach, which is all about discipline and, get this, zero debt. This little scorecard just makes the financial picture crystal clear. I mean, sure, all four of these companies are cash machines, but Jack Henry just pops off the page. It has an excellent return on invested capital of 20%, and again, zero debt. That screams incredible efficiency. They are just fantastic at turning their investments into profits. On the flip side, you see Global Payments taking on a whole lot of leverage to fund their next big gamble. Okay, time for our final round, the future. Where do these companies go from here? What are their big plans for growth, and what are the major risks that could trip them up along the way? So, Global Payments is making a massive, high-stakes bet, and it's a bold one. They're acquiring the exact same business that FIS just had to get rid of. The plan is to get huge, squeeze out massive cost savings, and then pay down all that new debt as fast as possible. It's a classic high-risk, high-reward move, and you can bet the market is watching with a serious prove-it-to-me attitude. Now, let's talk risk for a second. For Fiserv, one of its key vulnerabilities is just geography. A whopping 88% of its business is tied up right here in North America. Now, that's a pretty big concentration risk, and it stands in sharp contrast to a company like Global Payments, which is making international growth a core part of its strategy. So when you boil it all down, you're left with two fundamentally different philosophies about the future. You've got Global Payments going for what you might call high-octane growth, a really bold bet that could pay off big time, but only if they execute perfectly. And then you have Jack Henry, the reliable compounder. Their goal is just steady, predictable growth year in and year out by serving your core customers. It really is the tortoise versus the hare. All right, let's bring it all home and synthesize this. After going through all three rounds, a few key themes have really started to emerge. Themes that truly separate these four companies and define this whole race. These three ideas really tell the entire story. First, strategic focus. Jack Henry's laser focus on its niche proved to be more durable than the others' attempts at broad scale. Second, execution quality. Consistent, solid performance widened Jack Henry's moat, while those big stumbles really damaged FIS's. And finally, capital discipline. Smart, careful management created value, while massive, reckless deals just torch it. In every one of these areas, the analysis shows Jack Henry coming out on top. So we've looked at the business models, we've looked at the execution, we've looked at the future. It's time for the verdict. Now remember, based solely on this deep dive into the reports, one of these four companies just consistently rises above the rest. And that company is Jack Henry. Across pretty much every single category we looked at, from the strength of its competitive moat to its financial health and its execution, the reports just keep pointing to Jack Henry as the clear standout performer of the group. So let's just quickly recap why Jack Henry takes the crown in this analysis. It really boils down to this. It's got the most durable competitive moat, thanks to that incredibly loyal customer base. It has what's described as exemplary management. It has superior financial health with high returns and zero debt. And all of that together gives it the lowest overall risk profile, making it a classic slow and steady compounding machine. And that kind of leaves us with one final thought, doesn't it? In an industry that is all about speed, disruption, and nonstop innovation, the analysis here suggests the most compelling story actually belongs to the company that values discipline, focus, and consistency over everything else. So it really makes you ask the question, in the crazy world of fintech, can the tortoise actually still beat the hares? Something to think about. Thanks for tuning in.